It is time for business now with Nona Peltier, who joins me in the studio. Nona, so we're getting some results in. Retailer Briscoes Group, what can you tell us about how they're faring so far?
So retail company Briscoe Group, they have the Rebel Sport as well as the homewares brands. Well, they've done, I guess, what in his own words, Rod Duke told me that it was a spectacular result because they did achieve record sales and profit, even though the underlying, the net profit was down slightly. And that's only because they had to take a tax adjustment like every other company. But if they took that aside, they actually increased their underlying profit by just over 2%. Now, you might think that doesn't sound like a lot, but in the retail sector, that's pretty spectacular, I guess, because it's been a really hard go, and certainly they are expecting harder times ahead. Now, Rod Duke, in his report to the market, said that he would be taking a pay cut. Well, pay cut. He's just not going to draw a salary until at least the end of July, in a way of, I guess, helping out his staff. So this is what he had to say.
For me, I really wanted to do something significant and say to my people, this next short period is all about you, our staff and our customers. It's all about you staying safe, staying healthy, and just looking after yourself. We are very, very well placed. You're very familiar with our balance sheet. You're very experienced in terms of my market share and the sorts of things that we can do. No, I'm not anticipating any layoffs, but I want to stand with my staff, as my senior management have, and just said, look, we're going to take a pay cut. You don't have to, but we're going to.
Yeah, so there you go. That was Rod Duke.
Yeah, that is interesting. Also, obviously, with Air New Zealand's boss basically doing the same thing.
That's right.
And I suppose in some ways a gesture.
It's a gesture. Also, the board of directors of Air New Zealand, too. I mean, is it Air New Zealand that's doing it? I think it is. And Auckland Airport, there's a lot of measures being taken by the chiefs of these large companies, and I expect that there'll probably be more of that, as layoffs seem to be inevitable, unless, of course, you work at Briscoe Group, where apparently layoffs are not on the cards. No. In fact, he was really upbeat. He said that the retail sector is probably going to do it really tough, but he said the first couple weeks of March were busy. There were lots of people in the store. So obviously people are still getting out and spending their money, and he said certainly they're spending it online.
And maybe they're purchasing stuff like, for example, a fry pan and a wok or what have you if they have to eat at home, Nona. Because that's the other thing during times of crisis, people staying home.
Yes, I'm sure, the funny thing about this is that right now we do seem to be in a crisis where every day it's quite a shock. And the market is, today, the numbers that I had to do into the closing market report were shocking to me. And, but there were some upsides through the day, too. I don't know how many stories we processed, but like, for example, we had a cut in fuel prices today because, again, another sort of a shock type of announcement. So Brent crude oil has dropped by about 50% this year in response to there's a price war going on between the major producers, but also because of the energy demand going down. So there's a lot of energy, a lot of oil out there. It's basically a glut. And that's caused Z Energy to drop their fuel prices twice last week. First 6%, then 7%, and now again 5 cents across all its grades.
So I suppose that's some good news for consumers at the pump. Overall, though, what were we looking at on the market today?
So I better correct that. Did I say 7% and 6%? Because it should be cents.
Cents. Okay.
Yeah, cents. It should be cents. Sorry. Let's just get that right. Okay. And what were you saying?
Market overall. While that is sort of an up story for consumers at the pump, what were the overall machinations on the market today?
Well, this morning was pretty rough, which you would have expected after the Reserve Bank governor cut the official cash rate to 0.25%. That caused a shock in the currency market, so our dollar dropped below to 59.8 US cents. That's quite low. It's recovered. So at this afternoon, for example, it was at 60.6 US cents, and it was really toppy against the Australian currency, which is doing it tough at 98.1 Australian and 49 British pence. So just going back to the equities market, that shock came before the market opened at 10 o'clock. And when the market opened, Air New Zealand had already put itself into a trading halt at that stage and announcing to the market, we've heard already in the news, quite a lot of information about how it's affecting them. Like a 85% reduction on their international routes.
Yeah, long haul, 30% on domestic,
Yes,
a 30% drop in domestic capacity.
And more news to come on the Trans-Tasman route. So what happened? We don't know what happened to the airline's share price because, of course, it isn't a trading halt. But Auckland Airport also came and last week we talked about them downgrading their guidance by $50 million. Well, today they said, forget it. We're not going to
try and guess at a number.
We're cancelling that. So their shares ended down 20.9%.
That is a big chunk.
Yeah, that's huge.
So I noticed on your piece of paper there that you've got Sky TV. I'm interested in this because obviously they're sports heavy,
Right.
and sports events are being cancelled like Topsy.
That's right. So I will tell you that. But before we jump to that, I just want to say that Tourism Holdings, the camper van company, their share price dropped to 31.8%.
Because they have
exposure to the North American and European
to the US
markets.
market.
So Sky TV, it dropped 21.8%. And that's in the interim while it reviews the impact of all the cancellations.
Yeah, because what
on
is
their
there to watch? Where's their product going? Yeah,
exactly.
That's interesting.
And it's just at a time when people will be wanting to watch.
If they're stuck at home for 14 days.
Exactly. That's another shocker. And of course, overall, the local market, like I say, it opened down 4.5% roughly in late trading, morning trading. And it improved when the Australian market opened because the Australian market just dropped down like 7%. Last I looked, it was at 7.6% down. We finished down only 3.6%. I say only 3.6% because that's a huge number.
To watch. What were
350 points down. But if this helps, we moved to 9,477 points on the index, which is where we were this time last year.
Okay.
So it's not the end of the world. It's certainly it's a big step down. But, even when we had the global financial crisis, markets did recover. There you go. They're going to recover again at some point. We don't know when. How long this lasts is anyone's guess.
Thanks, Nona. That's Nona Peltier with all our numbers there, and there's a lot of them because it is a moving feast, as she says.